And definitely this COVID and as well as this current slowdown in the economy also it definitely impacted. During COVID, people were not sure in the initial phases what's going to happen, how it is going to impact the commercial real estate segment. But to our surprise, it really helped on the commercial real estate. So we had support from the government, and then we also had full occupancy on the property. So we were in a better shape during the COVID. Post-COVID, the liquidity is tight. So in the current market, so the lending space has shrunk and the interest rates have gone up. So as a result, it slowed down. So hoping that this current market condition is going to ease out soon. Once the Fed starts cutting the rates, I believe lending will accelerate and then the projects will start coming to light again at a faster pace.
Welcome to CREPN Radio for influential commercial real estate professionals who work with investors, buyers, and sellers of commercial real estate coast to coast. Whether you're an investor, broker, lender, property manager, attorney, or accountant, we're here to learn from the experts.
Welcome to Commercial Real Estate Pro Network's CREPN Radio. Thanks for joining us. My name is J. Darren Gross. This is the podcast focused on commercial real estate investment and risk management strategies. Weekly, we have conversations with commercial real estate investors and professionals who provide their experience and insight to help you grow your real estate portfolio. Today's interview is sponsored by Building Insurance and Risk. When you invest in real estate, it pays to work with a real estate investor protection specialist to protect yourself and your investment from catastrophic loss. The experts at Building Insurance and Risk focus on real estate investor protection. They provide you with multiple insurance coverage offers and a side-by-side coverage comparison. To learn more, go to buildinginsurancerisk.com. Today, my guest is Sridhar Sannidhi. He is a 30-year IT professional turned full-time real estate professional. And in just a minute, we're going to speak with Sridhar about multifamily syndication and development. But first, a quick reminder, if you like our show, CREPN Radio, there are a couple things you can do to help us out. You can like, share, and subscribe. And as always, we encourage you to leave a comment. We love to hear from our listeners. Also, if you want to see how handsome our guests are, be sure to check out our YouTube channel. You can find us on YouTube at Commercial Real Estate Pro Network. And while you're there, please subscribe. With that, I want to welcome my guest, Sridhar Sannidhi. Welcome to CREPN Radio.
Thank you. Thank you for having me on the show.
Well, you are welcome, and I am looking forward to our conversation. But before we get started, if you could take just a minute and share with the listeners a little bit about your background.
Sure. Hello, good morning, good afternoon, good evening, wherever you're listening from. My name is Sridhar Sannidhi. I was formerly an IT professional. I worked in IT for 30 years, and then I thought I should build something for future, so as a generational wealth and all. So in that process, I leaped into commercial real estate. Initially, I thought of building single-family portfolio, which I could not do much. So then I went to commercial real estate. That's where I started this journey 6 years back. And since then, I've been doing commercial real estate, particularly multifamily, value adds, and ground-up constructions.
Got it. So you mentioned your career was in IT, and that you decided in order to leave a legacy, you wanted to do something different. How did you settle on real estate?
So being an IT professional, our first thought was to start an IT company. And I had a few ideas to do that. And then I started teaming up with a few professionals, and they didn't come a long way. So in the middle, we had to stop that endeavor. And the biggest challenge was like money at that time. So I thought I should build my own network so that I can pursue those kind of dreams. Initially, I thought I should do with a single family, buy one at a time, and then build as a portfolio that can give me passive income so that I can focus on my IT company. But I couldn't do any single family portfolio build up. due to competition or something. Then I decided to go big and bold. So here I am. So started buying multifamilies in syndications.
Got it. So your start in multifamily, were you a limited partner originally, or how did you get into the syndication business?
First couple of deals, I was a limited partner, just to test the waters, whether whatever the syndicators have been promising, is it really worth it, or is it really transpiring or not? After getting a couple of checks, I realized that it's working. Then at that juncture, I decided to take an active role. I said, if I do passively, it's a slow progression. If I do an active role, then the rate of growth would be much higher.
Yeah,
So
makes sense.
Yeah.
So how long was it between the initial limited partner investment and when you decided to go more as an active participant?
6 months. I waited until the first couple of checks to see that it is a standard pattern.
All right. And so in the limited partner version, how large of a property were you invested in?
First couple of properties were like 100 plus units, limited partner in less than 200 unit type of properties, and then decided to come onto active role after that.
And when you say active role, have you been a general partner, or have you been the lead, or how active have you gotten?
The first couple of deals, I was a general partner, not a lead, but a general partner in the deals. After 4 deals, I started leading my own deals.
All right. And as a general partner, were you more of like the capital? Were you raising capital, or were you signing on the loan, or what was your role in that?
The first deal, it was mostly like a fundraiser. From the second deal onwards, I started taking responsibility of asset management, partial, not all the duties. So for each deal, I picked up different aspect of the asset management, so that I will cover all the functions of an asset management and get familiar with. So that's how the next 4 or 5 deals I worked on it. After that, I do complete asset management.
Got it. In the strategy for each of these, have they all been a value add strategy as far as acquire and improve and then increase the NOI? Has that been the
First 6, 7 deals, those are all value add deals. And after that, we started ground up construction too.
All right. So tell me what's different in the approach from a value add as opposed to a ground up.
Yeah, these two are different segments for different type of investor base. One is for like the value add is mostly for people who wants a steady income based on their investment. That suits for that type of investor. Whereas new construction is more like people who want to see net worth go up or a bigger check at the end. They don't worry about the cash flow distributions during the hold. So those are 2 different types of investors. So some of the investors were looking for a bigger gains. So that's when I had to think, and then I had to jump into the construction phase. So just to cater my investors, I went that path.
So tell me your experience between the two for your investors. What's kind of a range of return that you've historically? I know you can't project as far as what will be, but what kind of returns have you been able to achieve in the value add as opposed to the new construction?
So value add, we projected like 15-16% per year average rate of return for 5 years. So which is like 75 to 80% return projection. But we did few full cycles, and couple of them we were able to achieve that 80% return in 2.5 years. And one property we were able to exceed the average rate of return projected, but we did not reach that 80% in one property. So the 3 full cycles I did. Whereas construction, we project 80% in 2.5 years to 3 years versus 5 years.
All right. And with the 80% in a syndication, it's pretty much just return of the capital, and then the investors pay whatever taxes they owe and can reinvest or do whatever they want. In the development, is there any different tax situation created, or an opportunity for the investors to reinvest, or is it basically just a one project, raise the capital, do the project, sell the project, return the capital?
So at the moment, we are not doing 1031 exchanges to give the tax advantages to investors from the construction projects. However, we launched the value adds, so that value add project typically have a cost segregation that gives that tax advantage, so they can bring the capital gains into the tax advantaged value add project. That way they can defer the taxes.
Got it. And tell me about the size of the properties you're developing.
So the multifamily projects we have right now, one is 306 unit construction ground up, and another one is 330 units. There's another one that's going on at the moment.
All right. And I believe before we started recording, did you say you're based in Dallas? Is that where you?
Yes, I'm based in Dallas. Yeah.
Okay. And are your projects in Texas, or whereabouts are you doing your projects?
The construction projects are mostly in Dallas and Austin, whereas the value adds I have in Houston, Austin, Dallas, Wichita Falls, Memphis. So slowly we are expanding to other Sunbelt states.
All right. And raising capital, have you had tell me about your capital raising experience from the beginning to now. What's kind of been the response from investors?
Yeah, when I started, I was not sure whether I would be able to raise funds or not. So I reached out to 20 close friends, and I told them that I'm getting into commercial real estate. Are you interested in? Then they asked me, are you putting the money in? I told them that yes, I'm putting so much of money. Then they said, okay, we are also going to join you. If you're taking that much risk, then obviously it should be good. So let us also be part of it. That's how it started the conversation. So all people, whomever I called, so they all agreed. So that gave me the confidence that I can raise funds. So initially 1.2 million raise. So myself and another friend of mine, we raised more than million plus. So that is,
so
yeah,
$1 million.
that was huge.
$1 million. How big was the property? 4 or 5 million?
96 units.
Okay.
We bought for 3.2 million, I believe. Yeah.
Was that a heavy value add?
Yes. Close to 36 units were completely gutted, and around 48 units required heavy modifications or heavy upgrades, including those 36 units. So.
And what'd the exit look like on that?
So we did not exit, but the investors' money is more than doubled in last 5 years. We have been holding it for 5 years. We wanted to hold it for a few more months until the market turns around so that their returns would be even higher.
Yep. I think there's a fair number of investors with that kind of mindset right now, just based on kind of let the market reset here. I get it.
Yep.
So tell me that was a value add project. Tell me about the raising capital for new construction.
So new construction, as you mentioned, right, some of the investors were looking for bigger checks. I mean, they don't need cash flow or cash distributions, as most of them are working currently. So they're fine with that. So I thought it would be difficult to raise, but to my surprise, I was able to raise a big check for construction. In fact, I raise more per deal per construction project than the existing value adds.
All right. Now that's impressive. That's good.
Yeah.
And on the new construction, are you what's your role in the new construction? Are you the lead? Are you acting as a developer? Are you
So I'm a lead GP. Development also we were doing not as a full-fledged construction manager, but as a lead developer from the asset management point of view.
okay? And so then do you directly then hire the developer and construction, or how?
Yes.
Okay.
So we hired the general contractor, we hired the construction manager, and we oversee both of them, construction manager and the actual general contractor. We are working as a pseudo developer, in other words, so not 100% developer type of function, but yeah.
So did you partner with somebody with development experience, or how did you?
Yes.
Okay.
So we have a few other partners in the deal, so they have experience, construction experience.
All right. So you partnered with some developers with experience. You brought the capital. The project's underway. How far are you from certificate of occupancy on that?
So another 9 months will be done with that first project. Yeah.
Okay. And will the exit be post lease up, or where? I mean, I would assume
Yeah,
that would be the case.
yeah, post lease. That's what our. Yeah, we get buildings in phases. So as and when first phase is done, then we will lease them out while the second phase buildings are ready, like that.
And what is the projected timeline to lease up a building?
So by the time we get the third phase, we will be left with 35% of the units being empty. That's our guess. So after that third phase is done, we are expecting within 3 months we will be stabilized.
Yeah, that's pretty fast.
Yeah.
And what's the build time on the project from start to stop?
It was projected to finish in 2 years for just construction piece, but so far we are running late by 6 months due to weather and other related issues. Yeah.
Yeah. Is that creating any issues for the capital or the lenders, et cetera? Or
Yeah, we had some hiccups. We are working on those hiccups. Like lenders, obviously, we need to extend. Initially, they gave the loan for 2 years, so we are working on that lending extension and all that. So the current lending market is tighter, so that's another thing that is creating a little bit of challenge with the lender. Yeah.
got it. So with the market being what it is, I mean, the areas that you've described to me, or you've mentioned Dallas and Austin, and that my impression is that the demand is high for the product you're developing. Is that continue to be the case? I mean, I'm assuming that is the case if you're building there.
Yeah, the suburb where we are building, that one is experiencing double-digit population growth year over year. So it is going in that fashion for past several years, and it is projected to continue in that pattern for at least next 5 years.
Well, it should cover you for your exits there. That's great.
Yep.
How do you go about identifying the opportunities for your development?
So we do have a criteria to pick the project, and most of the time we see minimum $80,000 to $90,000 median household income. That way we see the tenant base to be resilient of any downtowns and all that. And second thing is it should be commutable to workplaces. The location should be commutable to workplaces, like that. So if we find a decent sized project, typically we look for 200 plus units for construction. If we find such project, we will go for it.
Yeah. And what about the developers and the other people that you're you're having to bring on board? Is there any kind of a prior relationship, or how do you go about screening or selecting the parties that you're working with?
So in this project, the people who we partnered, we know each other for a while. So that's how we started. As far as the persons who are experienced in construction side, luckily we have in the partnership team. We thought of bringing someone else also, even though we have some partner experience. We thought of bringing someone else, but it didn't work out. So, but we always look for somebody who has more experience than us in the construction space to bring them as a partner.
Got it. So I think you said that the first project, what are you, about a year out from having that
Yep.
complete?
Yep.
Okay. So your personal opinion,
Yep.
kind of sense of how things are going compared to the pace at which like a value add project can go. Do you are you feeling? Tell me what you're feeling. I mean, just from the difference between the two, like
So,
a
basically, we did some rookie mistakes for the first project, but from the second onwards, we know what needs to be done. Um, One such mistake is bringing the construction manager at a later phase than at the start time itself, so which we kind of realized it. So from the second project onwards, we hired the construction manager in the beginning. That way, we have smooth the execution of the project.
that's an interesting lesson there.
Yep.
The construction manager, what is it that you find that they, I mean, as far as making it smooth, what are some of the challenges you found on the first one with bringing them in later?
So the first thing is like a coordination of activities, right? Even though the GC has their own project manager, oftentimes there would be a communication gap between the ownership team and the general contractor, and we were not able to foresee how it would impact on the project at later stage. So the construction manager typically has the vision, like what can be the consequence if we delay on certain things, right? So those definitely are the ones which we learned from the first project, and that's why we started doing that. So we could have avoided some of the delays due to weather and all had we planned properly.
Yeah, no, that keeping the project moving smoothly and making certain it all follows the right order, right? You don't want the
Yep, yep,
drywall guy showing up after the paint guy shows up. You got to have the paint show up after the drywall.
yep,
But that's I mean, always appreciate lessons. People learn and share them, because it's probably there's
yep,
plenty of people that would not have considered that and maybe not have understood what the importance of that is. So I
yep,
appreciate that.
yep.
So given the current market conditions, I mean, you've been doing this. What was the year you started investing as an LP?
2018,
Eight.
2018 I started. Yeah.
Okay. So from 2018 to now, the market is, I mean, it's done all sorts of crazy things.
Yep,
I think in 18, I remember people talking about, oh, the end of the cycle, the end of the cycle, the end of the cycle kind of thing. And then we had COVID, and that only like accelerated the cycle. And now we're recording this in December of 23. How have the market conditions affected your, I guess, your view of things and or your plans, expectations for the future?
yeah, definitely this COVID and as well as this current slowdown in the economy also it definitely impacted. During COVID, people were not sure in the initial phases what's going to happen, how it is going to impact the commercial real estate segment. But to our surprise, it really helped on the commercial real estate. So we had support from the government, and then we also had full occupancy on the property. So we were in a better shape during the COVID. Post-COVID, the liquidity is tight, so in the current market. So the lending space has shrunk and the interest rates have gone up. So as a result, it slowed down. So hoping that this current market condition is going to ease out soon. Once the Fed starts cutting the rates, I believe lending will accelerate and then the projects will start coming to light again at a faster pace.
So what you just described there is kind of the theme of everybody I think I've talked to is just kind of the slowdown based on the lending
Yeah.
kind of thing. My question to you is with respects to your investors and that how have you been able to communicate and I guess manage their expectations? Has everybody remained calm, or have you had to ramp up your communications with your investors to keep everybody their expectations in line, or how's that gone?
So prior to COVID, we used to do like newsletters only on a monthly basis. And then once a quarter or twice a year, we used to have a meeting, like a Zoom type of meeting. From the COVID time onwards, we started a monthly investor meet. Irrespective of the project they are in, we started showing what's going on in every single project of ours. And also we started sharing how we see the economy is growing and different indicators and all that. So we started discussing that with all the investors. They can ask any question from any property, and we have been transparent, in other words. So that helped us. So very few investors are little upset that we had to go through in the variable interest rate loans. Yeah. Other than
Well, I
that,
said
yeah,
that communication thing usually helps.
yeah,
If they know what's going on, and
yeah,
they may not be happy, but at least they
yeah,
know you're still there doing your thing.
yeah.
Is there any in the current market, given from 18 to now, have you been raising money capital right now for any future projects? What's been the attitude of the investors or the
Definitely, investors have many reservations now in investing new projects due to several aspects. Right, in Dallas market, they see slowness, so and everybody is worried about their current investment, so they wanted to wait and watch until things are panning out the way they wanted to. So we had to double down on reaching out to the investors, and then also we had to adjust our percentages of investor pool that would invest with us when we reach out to them. So we had to reach out to many more investors than what we usually do for a single transaction.
given the greater number of investors you're reaching out to, have you been successful in meeting your investment or your capital raise goals?
Yeah, personally, I was able to reach all my goals, but my other partners, some of them have difficulty in reaching out to their targets. Then I had to step up and use different mechanism to fill in the gaps.
Yeah. Well, if there's one thing that I've come to recognize about the real estate market is there's the up and the down, and interest rates, all that fun stuff. It's usually the time is the thing that makes it all work.
Yep.
If you got if you have the time to wait it out, usually everything works out all right. It's if
Yep.
you lose the time, then you can end up in a little bit more of a challenging situation.
Yep.
But yeah. So, well, it sounds exciting. What what you're working on? Is there a favorite project that you're working on?
So we are working on a entitlement project, but we will take it into phase 2 if the market condition permits. That's like 20-acre development, mixed use development, like a hotel, townhomes, retail space project. So
Wow.
that's first leaping into that area. So again, it all depends on how the market is at that time. So we are going through entitlements at this time.
Yeah, that is what kind of separates the the men from the boys kind of thing, and that ability to the time, and then the ability to deliver a product when the market's receptive to it. That's a and hang on to it. That's one of those challenges with the development and that. But that sounds exciting.
Yeah.
As far as your investment strategy, do you find that your investors typically? I mean, we've talked a little bit about it, but is there any sense of like a long-term kind of hold on to product your projects, or is it most of it get leased up and then sell and return the capital? Is that pretty
Yeah,
much the?
sure. Yeah, we started working on long-term strategies also. Now what we are going to do is like have a very limited number of investors. We will work with them to build and then hold the project for 10 plus years. So not everybody will be willing to do that, but there are some subset of investors who wants like stable income. They don't need about like top percentage interest or something like that, but they want stable income at the same time the wealth growth, right? So we
Right.
do have some high net worth individuals who are willing to do that. So we are working on those projects. Next year we will launch one or two such projects.
Yeah, no, I think that's one of the ahas I guess I've had over the years, is just
Yeah.
recognizing that when you bring a bunch of people together, um, it seems like the reason why most of the investments are targeted for an earlier exit is trying to keep everybody on the same page, or
Yep.
attracting people, whereas for a longer view it takes a little bit of a different um, I don't know, temperament for an investor, or the ability to be in an investment that long.
Yeah.
Some people need their money.
In that aspect, we are also giving the flexibility to liquidate their share at any point in time. So we are designing in such a way that those who want to continue for long term, they can continue. But if their circumstances change and they have to exit out the property, so we are coming up with a mechanism to compensate them and then continue on the project for long term.
Yeah. No, it sounds exciting, and you're living the dream there. You've got all of the fun. You got the raising the capital and doing the projects, and making you and your investors money, and then the challenges that come with it. So
Yep.
that's great. Hey, Sridhar, if we could, I'd like to change gears here for a second.
Mm-hmm.
As I mentioned, by day I'm an insurance broker,
Yep.
and as such, I like to ask all my guests a question. And like I said, by day as an insurance broker, when I work with my clients, we work to assess risk and determine what to do with the risk. And there's three different strategies we typically consider. The first is we look to see if there's a way we can avoid the risk. When that's not an option, we look to see if there's a way we can minimize the risk. And if we cannot avoid nor minimize the risk, then we look to see if there's a way we can transfer the risk. And that's
Yep.
what an insurance policy is. It's a risk transfer vehicle. And as such, I like to ask my guests if they can look at their own situation. Could be their investors, could be the political winds, could be the interest rates, the Fed, whatever it is that you see and identify as to be the biggest risk. And again, for clarification, while I am an insurance broker, I am not necessarily looking for an insurance related answer. And so if you're willing, I'd like to ask you, Sridhar Sannidhi,
Yep.
Sridhar Sannidhi,
Yep.
if you could identify what is the biggest risk.
So it used to be property and casualty for this large projects earlier, but in the current lending market, it is the variable interest rate is the biggest risk for current projects. So we bought rate cap insurance to mitigate the risk or transfer the risk, in other words, so that we are protected from the interest rate increases. That's the biggest risk we have seen in the latest market. And besides that, property casualty insurance, that too, the projects we have in coastal areas. The biggest one is like hurricane type of events, right? We had to protect ourselves, our investments. So we had to take the insurance to cover all the costs that can arrive from any damages that happens during hurricane season.
Yeah, and I know, matter of fact, that is wind insurance is going up quite a bit. So I can appreciate that. I'm curious in your experience with that, given the new construction, or were these new construction projects that were more challenging, or was it just the existing stock that you had?
Existing ones had this insurance challenge. Suddenly the rates have gone up. So we had to mitigate that. And then
I say, and that's kind of consistent with what we're seeing, is just the age of construction dictates a lot of the willingness or the ability for carriers to provide something that's cost effective, or affordable, I guess. So I can appreciate that. Appreciate you sharing that. Sridhar, where can the listeners go if they'd like to learn more or connect with you?
So they can go to my website, www.growwealth2retire.com. Growwealth numeral 2 retire.com.
So growwealth2retire.com.
Yes.
Got it. Well, Sridhar Sannidhi, I cannot say thanks enough for taking the time to talk today. I've enjoyed it, learned a lot, and look forward to doing it again soon.
Thank you. Thanks for giving me this opportunity to connect with your listeners. I hope this is useful to them in their real estate journey. Once again, thanks for having me on the show.
You are most welcome, and again, appreciate you coming on.
Yeah.
For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CRE PN Radio.
You're listening to CRE PN Radio for influential commercial real estate professionals. For more information on this or any of our guests, like us on Facebook, CRE PN Radio.